Hey everybody, it's me, Gregory Mannarino, and here we are, back again together, at last, still surrounded in loveliness. It's Friday, October 26th, 2018. My eyeballs exploded just 5 minutes ago when I checked my email box. A lot of you are concerned about this stock market. I want to talk about that, a bunch of stuff with you. As I am doing this video blog, the Dow Jones Industrial Average is down about 400 points, erasing pretty much all of the gains from yesterday. I've covered with you this market volatility is pretty much off the Richter scale. However, just going through some of my emails this morning, it seems that there are a lot of you that are, in my view, and I could be wrong here, overly concerned about what we're seeing. Here's what I think is going on. And it's very straightforward. People are not used to seeing this kind of thing. But prior to the 2008 meltdown, this was normal. You know, people would get a little, oh, wow, look at the market. But not like now. People are in, the general public seems to be panicking. Or a lot of you who have written to me seem to be a little bit panicky here. But again, what are we off? Maybe 10% off the highs of this market? Are we even that much? I think the NASDAQ is down 10% off of its high. So put this into perspective where we are. Now I want to talk about something else that I always talk about, but I really honestly want you to have a look at this because you won't believe what I'm talking about. Again, the 10-year yield as I am doing this video blog is 3.08. All right, what does that mean? A lot of cash is moving into the bond market. When cash moves into the bond market, either seeking safety or a prop-up mechanism, very difficult to tell what's going on these days. This pushes the 10-year yield lower. Okay, the lower they push that yield, the wider the doorway opens for cash to flow into the stock market. This is the same exact mechanism that has been in effect since the meltdown of 2008. You all know that. So with that said, once investors realize there's nowhere else to go, where do you think cash is going to attempt to flow back into? You want to put it in, lock it up for 10 years and earn 3%? No, of course not. Should people be putting cash in hard assets, precious metals, understanding that the market runs in cycles, risk on, risk off, risk on, risk off? Absolutely. However, there's a deliberate attempt, as you are all more than aware, to keep the price of gold and silver physical artificially suppressed. You know what I'm going to tell you. 5 banks in the past year alone have been caught rigging the price of metals. They don't want you there. So most people are going to, again, look to put cash to work in the stock market. Now this, what we're seeing here, again, people, please understand what I'm telling you, is normal. Nothing major going on here. And with the epic amount of bond buying that's going on right now, it's going to put a floor under the stock market. Of course, we have to consider other things as well. But again, just look at the bigger picture. Look at the macro picture, all right? Where is cash going to go? Seriously. It's pretty simple. It's the environment that we are in, and it's deliberately engineered. So, again, what we're seeing here in the market, these gyrations, yeah, they're spooky. Stocks being maybe 10% off their high, if that much. So what? Again, this is normal market activity. This is nothing else. I'm not saying that we're not going to hit a wall at one point. We are. But understand, you're looking in the wrong spot. And I've been outlining this for you for years. Literally years. People are fixated on the damn Dow Jones Industrial Average. I can promise you, the big one is not going to start in the Dow Jones Industrial Average. It's going to be in the bond market when we have an uncontrolled sell-off. sell-off, which will spike rates. So rates are being squashed right now. Understand? It's fake. All of this. You know that. So just watch these things and you'll sleep better at night. You really will. Stop trying to, if you're a trader, stop trying to pick directions with this kind of volatility. And like I've been explaining to you for, it seems like time immemorial now, learn how to trade credit spreads. I'm sitting here pretty right now. You want to see my positions? Go to my website, traderschoice.net. Look at how I set up my own credit spreads. Okay? I am so fine right now. It's insane. Learn these things, people, and try. Look, if you're going to get all hyped up about the market, whether you're a trader or an investor, you have a 401k plan, you're going to make bad decisions if you get hyped up. Don't let that happen. Just think about all of the loveliness that is around you and I right now, and you'll just feel all warm and fuzzy everywhere. And that's what I want you to do. I want you to feel warm, fuzzy, and carefree right now. Just let this blow over. I promise to tell all of you, and you can see this for yourself. If you just watch the bond market, watch the 10-year yield, one thing. And once you see that starting to spike in an uncontrolled manner, that's when you start to panic. Until that happens, you just sit back and smile. Again, why? Because you're surrounded with loveliness. I will see you all at the end of the day. Bye.